Assalamu Alaikum everyone, welcome back to another video. I hope you're having a great day. I just checked the market and realized this company, Adobe, is down, I think right now about 15%, 16%, 17%. I knew they were reporting tonight, but apparently they've reported already. So straight away I assumed something must have happened. And apparently they've reported this morning. They were supposed to report after the markets closed this afternoon, but apparently they have already reported, and their earnings report was what we expected. So this is what they've reported. So the revenue was a beat, the earnings was a beat, but some of the revenue was a miss. So but overall, generally, okay, it was a beat by just 0.1%. And they've told us this before, so there was no actual surprises. They've came out recently and said there was a lot of headwinds because of the basically the dollar going up, because a lot of their products are actually sold overseas. So the dollar being basically too high at the moment, for that reason they basically were losing a lot of money to FX and the exchange rate basically. So they've told us already, we kind of knew it. Okay, so they beat their adjusted EPS, and their digital earnings, recurring basically revenue, was a miss, and so on. But their guidelines also was a miss in terms of the next quarter. So Q4, they are missing their revenue. They so basically are expecting to miss that, but EPS is they're actually supposed to beat it. So I'm looking at this, I'm like, there's no huge surprises. But then I found out there's another situation going on, and that is the company is actually buying another company, okay, for $20 billion. And that's the bit that I want to share with you in a second. So just before we get to that, as you can see here, it reported the earnings, okay, $3.40 per share, right, adjusted. And it was basically, the street was expecting $3.33. So that's a beat. $4.43 billion of revenue. They were expecting 4.43, so which is fine, and that's basically what they were expecting. And then their guidelines, obviously 4.52 billion is what is expected, and that what the company is projecting, and compared with the consensus estimates of $4.6 billion according to the street. Okay, and basically in terms of earnings per share, $3.50, that's what they're expecting, and the street is expecting $3.47. So that is a beat. So in terms of revenue, they're not going to grow that as much, but in terms of earnings, actually they are growing that. So there's not huge surprises in there in terms of earnings report, but this is what's happening. So the company called Figma, which is an online company, basically is a cloud-based design company, okay, and they are acquiring this business. And to be honest with you, I came across this company very recently, and between Canva and Figma, I actually genuinely thought Adobe might be in trouble, because they have a really good product in this company. I use Canva a lot, but this company has a browser platform. You can also download the application if you wanted to, and everything is done on the browser, cloud side of things. You don't need to download any software. Whereas Adobe, even we use it for our company, we still have to have access to, basically we still have to download the physical software, the Creative Cloud suite first, then be able to access those, download those files into your hard disk and so on. You can have it in the cloud, but it's slightly slower, right? So I thought the company might be in trouble in terms of when it comes to wide mode, for example, because the company does have a wide mode. So by seeing these companies, I thought they are really direct competitors. So I'm not surprised the company is actually paying $20 billion to acquire Figma. And some of that money will be cash, some of that money will be through a stock basically. And if you go to their website, they have talked about that. So Adobe to acquire Figma. So that's basically the article. And there's a lot of information here. Both CEOs have actually talked about what this means to each company. And I just want to go over some of the highlights for me. It says here, Figma's web-based multiplayer capabilities will accelerate the delivery of Adobe's creative cloud technologies on the web, making the creative process more productive and accessible to more people. And this is really important, and I think this is something Adobe was missing. So I'm not surprised they're paying $20 billion for this company. And the owners of this company have done really great job by actually attracting this company to be acquired by, obviously, Adobe, right? So as you can see, both teams are looking forward to actually working together. And when it comes to the president of the Adobe's digital media business, he said, we look forward to partnering with their incredible team and vibrant community to accelerate our joint mission. Okay, and that is really important that for Adobe, especially for a company that is a right now SaaS model kind of thing. And for that reason, I mean software as a service, which is basically that recurring revenue. Annual recurring revenue is going to grow. So this company, basically Figma, has a total addressable market of $16.5 billion by 2025. And that's one of the reasons they're acquiring this company. So the company is expected to add approximately 200 million in net new annual recurring revenue this year. And then next year, basically almost 400 million in total by existing 2020, with the best-in-class net dollar retention of greater than 150%. So that means not only the company is retaining basically the companies that use their product, they are also basically making another 50% sales on the top of that. So this is absolutely huge, and I think it is a company, Figma is a company that's already in profit. Unlike the other companies out there right now that are still in their early stage, is still burning cash, is still getting into debt and so on. This company is making profit already. And that's probably what's attracting Adobe to acquire this company. So I'm not sure if this is a negative for me. I'll be honest with you, $20 billion is a lot of money. But when you look at a company like Adobe, to pay $20 billion, they must see this company like as a competitor, and they're trying to increase their white mode, if you like. By doing that, if they can acquire the Canva, trust me, they will own that market. And this company is already down 26%, and that's basically before today. So we will see by the time basically the market closes today, this company will be, right now is basically $307. It will be 5-star stock. Right now only 4 stars. 5-star stock by the time the market closes today, because 350 is when they will actually turn into basically become a 5-star hotel, 5-star stock. And according to tip rankings as well, as you can see here, they're expecting the price to be $455 per share. That's almost a 50% upside. Okay, and when you look at how many buys, so 14 buys out of the analysts that have talked about this company, 14 say it's a buy, 7 say it's actually hold. No one is absolutely selling this. So clearly, I need to learn a lot about this company in terms of, I'm talking about Figma side of things, and see in terms of right now, just to having looked very quickly, just looking at the details, it looks like it is going to be a great buy and great addition to what Adobe already offers. And the fact that they already are in basically making money, that is a very good thing. I don't see this as a negative thing. I absolutely love Adobe. They have amazing products. I mean, their product is basically has been around for a long time, and a lot of these companies, especially the companies like Microsoft, actually has been using both Figma as well as Adobe. So what I'm trying to do in the next few weeks is basically add to my shares of Adobe. I'm not going to sell. That's not going to happen anytime soon. I'm down right now, I think, well, £500, but I don't genuinely care about that, because I know this company is going to be around for a very long time. And if they can get through this, by the way, this deal is not completely done, by the way. Let me quickly show you. So yeah, as you can see here, basically they will be paying half cash and the other half will be stock. And it's all obviously subject to receipt of basically required regulatory clearance and approvals and satisfaction of other closing conditions. So obviously the deal is not done yet, but if this deal goes ahead, I don't think this will be a negative thing for the company. And for that reason, I'm holding on to the basically the stocks that I own already. I'm definitely going to add to this basically in the next few weeks. My price target right now is about 300. If it hits that 300, I think I'll buy a few more shares. But as you can see right now, my basically average price is $486 per share. That's basically how much I've actually my average right now. So by buying it hopefully 300, I will average it down. I'm down £500 at the moment, but like I said, I genuinely don't care about that because I'm holding on to this company for a very long time. Although they grow in their revenue. Let me quickly show you something. Have a look at this. In 2012, this company had $4.4 billion, right? And right now we're looking at about $16.6 billion. So in terms of revenue growth in the last 10 years, has been absolutely amazing, from 4 to 4 billion, 4.7, 5 billion, 7 billion, 9, 11, 12, 15, 16 billion dollars. So they are definitely growing their top line. There's no doubt about that. They're growing their net income at the same time. So it's a company that is fast growing, company that has been around for a long time. Company is very well known. They have a product that is basically, they have recurring revenue. For me, that is really important, especially from software side of things. So I'm definitely going to keep it. Like I said, I'm going to add to it as well. So inshallah, we'll see how it goes in the next few weeks. I'll let you know if anything else happens or anything changed. But yeah, I just wanted to do this quick video just to kind of share with you my view, because if you own this stock and you've seen it today, literally came back from work and just saw it, I was like, whoa, what's going on here? I thought they basically released their earnings basically early on today. Again, that was the truth. But at the same time, when I saw this, I was like, okay, this is not bad. This is the kind of thing they've already told us about. So there must be something else. So straight away, I knew there was something else. And the fact that they've actually acquired this company and paying some of it cash, some of it basically stock, that doesn't mean that basically the stock is completely useless anymore. So yeah, for that reason, I'm going to keep it. I'm going to add to it, inshallah, see what happens. And again, like I've always said to you guys, you're going to have to do your own research. I am comfortable holding this company because I use their product a lot. I mean, I work and so on, and I know what it actually means to our company and so on. So I don't think the company that I work for is going to change this anytime soon because they've actually acquired a new company. They're probably, all these companies, by the way, Figma is actually one of the Microsoft's main customers, right? Microsoft is a customer of Figma. So that means Adobe is now basically, if everything goes ahead, Microsoft will also be using Adobe products. So that can only be a good thing because Microsoft is a great company, is a huge company, and they have so many basically not only customers, they have so many workers as well. So anyway, that's my view of basically what's going on with Adobe. I'm going to hold on to it. I'm going to add to it, inshallah, for the next couple of weeks and then see how it goes. But right now, as you can see, it's down 16%, I think. Just before I finish the video, I just wanted to quickly show you in terms of where it is. So a year, basically, for this year is down 50%. At one point, this stock was almost $700 per share. A year to date is actually down 45%. Last 6 months is down 26%. Just this month, 31% down, right? In the last 5 days, is down 20%. And as you can see, just basically today is down 16.72%. The market is still open, so anything can happen. It can change anytime soon. I hope you enjoyed the video. If you have, please like, subscribe to the channel. Let me know if you have any questions. Have a wonderful day. Assalamu Alaikum.